Welcome back to the channel. It's me, Adam. I hope you guys are all doing well. In this video, I want to take a look at Cathie Wood's Ark Invest and her 5 different ETFs. And the last time we did this was, I think, last November. And at the time, I believe ARKK, from my memory, was below $100. I think it was like $80 or $90. And this was like early November, right before the vaccine news came out. And we had the everything rally across the market from November to February for most things, at least. And a lot of things have been rallying since then. For example, the 10-year, but that was more since like the beginning of 2021, as well as we know, oil and energy. And in the other corner of the boxing match, we have Cathie Wood and her claim for deflation over the upcoming years. There's so many different variables and macroeconomics to all of it. And in the video, we're going to be taking a look at ARKK, W, G, F, and Q, and see how they're going to fare moving on. So before we get to the video, if you're new to the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we look at everything from stocks, crypto, options, ETFs, and we're investing for the long term. As always, hit that like button and let's get started. So for those who aren't aware, Ark Invest is an investment fund manager who invests solely in innovative technologies. The world is changing rapidly. While traditional investors seek safety in benchmarks and passive strategies, Ark believes this behavior is counterproductive. Innovation is causing disruption and the risks associated with the traditional world order are rising. We strive to invest at the pace of innovation. So the one thing we have to take into consideration when it comes to innovative technologies is that the vast majority, if not all the stocks that Ark Invest buys are all growth companies. And unlike a value stock, growth stocks tend to trade at more wonky valuations because they're expected to grow more than the average stock. And instead of paying their profits as dividend, if they're even profitable, they reinvest in their own company and in themselves for more asset appreciation long term. And growth stocks can be anywhere from a startup all the way to Apple stock, for example. Essentially, if the company is growing their top line at a large clip, they're a growth stock. So oftentimes, a lot of these different growth stocks can be very volatile. So taking a look at all the year-to-date performances. So ARKK right now is at 115. It peaked out earlier this year at a 52-week high at 159.70. Down 7.31% year-to-date, and from the peak to where it is right now, we are down 26.18%. And taking a look at ARKW, the next generation internet ETF, so it's up 1.65% year-to-date. A 52-week high of $191, and since that peak, we are down 21%. And taking a look at the next one, ARKG, the Genomic Revolution ETF, this one's down 19% year-to-date, hitting a 52-week high of $115. Since that point, roughly, we are down over 30%. Taking a look at ARKF, the FinTech Innovation ETF, it's up 6.35% year-to-date, hitting a 52-week high of $64.50, and since that peak, we are down 17.5%. Lastly, we have ARKQ, the Autonomous Technology and Robotics ETF. Year to date, it's up 4.58%, hitting a 52-week high of $101, and since that point, we are down just under 20%. And they actually forgot about this one as well, ARKX, the Space Exploration and Innovation ETF. This one only came out of March of this year. We don't have as much data. It's down 2.12% since inception, hitting a 52-week high of 21.33, and since that point, we're down about 7%. So now that we know their performances for the year, what are actually in these ETFs? So I want to first start off that all the expense ratio for all the ETFs is 0.75%, meaning every $10,000 that you have invested in the fund, you're paying $75. So looking at the top holdings, we have Tesla just under 10%, Teladoc at 6.25%, Roku at 5.64%, Coinbase 5.44%, Unity at 5%, Zoom at 4.5%, and then smaller portions of Square, Spotify, Shopify, and Twilio. Looking at ARKW, this one's similar with a few changes. So same idea with Tesla with the same weighting. Unlike ARKK, they have 7% allotted to Bitcoin, and similarly we have Coinbase up there as well. Twitter's a lot higher in this one than it is in ARKK. Teladoc is lower but still makes up a significant proportion at 5%, and similar names as well as Roku, Unity, Square, Spotify, and Shopify. And for next one, we have ARKG, the Genomic Revolution. And at one point, Cathie Wood called this one the next FANG stocks, which FANG being Facebook, Apple, Amazon, Netflix, Google, which are the biggest companies in the US. She has a lot of faith in this sector looking forward to 2030. So no Tesla in this one, but Teladoc takes a huge portion at 7.91%, just under 8%. And then we have a bunch of other names that I'm not very familiar with, like Exact Sciences, Pacific Biosciences. I am familiar with Vertex, and I've heard very good things about it in the long term, as well as NTLA. I don't know how to pronounce this, Intilia. But you know what? I am no expert whatsoever when it comes to biotech, and I have no idea what any of these companies do and which ones will be successful and which ones won't be in the future. And when it comes to a sector like this, I would rather invest in an ETF like ARKG than pick for myself. And taking a look at ARKF, the FinTech Innovation ETF, again, we see no Tesla, but Square making up 10%, Coinbase at 6.45%, Zillow at 6.1%, Shopify 6%, C Limited 5%, PayPal 4.5%, Twilio, Opendoor, Adyen, and Teladoc. I think up to this point we've seen Teladoc in all of them so far, as it does encompass a lot of their innovation themes. But I know they've been big on Square for a while now, and it used to be a way bigger holding in ARKK and ARKW maybe a year ago, but since then they've trimmed it and then given it to different names. Looking at ARKQ, the Autonomous Tech and Robotics ETF, and looking at the holdings, and there we go, we have Tesla at 11%, and a bunch of interesting names, Kratos making up 7%, Trimble at 7%, UiPath 6.5%, Unity Software, JD.com, Lockheed Martin 3D Systems, which is a 3D printing company. This one's a little bit more interesting, and I do believe that autonomous technology and robotics are the future. I just, again, don't know which companies are going to prevail, other than, of course, Tesla, which I'm a big bull long-term on. And I remember Elon saying that one day people are going to not look at Tesla as a car company or an energy company, but as a robotics company. And that really turned my head, or caught my eye when he said that, or twitched my ear or whatever when he said those words. I'm like, wow, really? Not to mention the robot that's coming out for Tesla, and Elon and Neuralink and the automation of that, and just craziness technology that's coming up in the future. And the last ETF, the one I almost forgot, the Space Exploration and Innovation ETF. And the reason I forgot about this one is ever since it came out, it's kind of had a weird feel about it. The holdings, and you had 3D printing companies. I remember when the ETF came out, we had Netflix in here and John Deere and all this weird stuff. It was odd, so I don't really pay too much attention to it, but you can take a look at the holdings for yourself. Trimble at 9%, 3D printing at 7.77%, Kratos Defense and Security 6.3%, L3 Harris at 6%, Lockheed Martin 5.6%, and so on. And although I do look at the technical analysis for all of these different funds, because it is an active ETF and they are buying and selling each and every day, I find that because they're tinkering with it, the data points aren't going to be as reliable than if it was a passive index fund. But we do see similar patterns within all of them to varying degrees, and we can make up certain levels of resistances and support lines, psychological key levels. So it's been a tough year for ARK, especially their flagship innovation fund, ARKK, and a lot of people have been losing faith in jumping ship as the ETF had been hit by a record outflow in September. And you can see that in this graph over here, especially at the end of 2020, when everything was going really, really well for the ETF. And then ever since February time, Kathy has really had to adjust with the strategy. But you know what? I bet you she saw this a mile away, especially after the run-up in 2020, that it was going to come to some kind of end, and she was going to be prepared for whatever scenario was going to come. I also want to point you guys to this website, kathysark.com, and you can filter all the ETFs and the holdings, search by ticker or category, and you can see different information like the weight rank, the overall weight, market cap, ARK's ownership of the company, the average of their cost basis, market value, which funds they're in, and so on. So Cathie Wood and Ark Invest have had a pretty roller coaster of a year, a lot more down than good this year. However, it is hard to follow up after such a performance in 2020, and especially as her ETFs have been underperforming and negative on the year. There's a lot of reason to be optimistic in the long term, even when a lot of people are pessimistic in the short term. Otherwise, that's the end of my video. Thank you very much for watching. Let me know in the comments below what you think of Cathie Wood and Ark Invest. As always, like, subscribe, and I will see you guys in the next video.